If you have an IRA, do not invest another dollar into it until you watch this video. What's up everybody, I am Jaspreet Singh and welcome to the Minority Mindset. The IRA, not to be confused with the IRS, is a tool that you can use to grow your money tax-free. The IRS is the thing that keeps taking all of your money. But there is a right way and a wrong way to use your IRA, and unfortunately, 2 out of 3 Americans don't have a clue of how to use their IRA. That's why in this video, I'm going to go over how to use your IRA the right way and how you can get the best return on your IRA. So make sure you watch this video until the end. But before we get into that, make sure you hit that thumbs up button below because it's kind of like a virtual high five, and subscribe to the Minority Mindset YouTube channel. That way you don't miss our new financial education videos every single week. And hit that little notification bell too, because if you don't, then YouTube's not going to let you know when our new videos are released. First, let's make sure we're all on the same page. How do IRAs work? An IRA is a retirement account that allows you to grow your money tax-free, but it comes with 2 catches. The first catch is your money has to be qualified to invest into an IRA, and for most people that means that you can invest up to $6,000 in 2020, and if you're over the age of 50, you can invest $7,000. The second catch is when you invest your money into your IRA, you are not allowed to touch it until you are 59 and a half years old, unless you qualify for an exception. What you need to understand right here is that all IRAs are not the same. You have the traditional IRA, the Roth IRA, and then there's a secret backdoor IRA. The traditional IRA says that you can deposit money into your IRA today and pay no taxes on that money that you deposit. So if you make $50,000 this year from your job and you invest $6,000 into your IRA, you don't have to pay taxes today on $6,000 worth of income, so you're only paying taxes on $44,000 worth of income today. But this doesn't mean that you have to pay no taxes on the $6,000 at all. So let's say you invest this money into your IRA, and over the course of your IRA, this $6,000 grows to $60,000, and you pull this money out when you're 60. Well, now when you're 60 years old and you pull this $60,000 out, you're going to have to pay taxes on all of this $60,000 based on whatever tax rates are when you're 60 years old. Just to make this clear, I'm going to write that this is taxed. So all $60,000 is taxed. The Roth IRA works a little bit different. So if we go back to the same example where you make $50,000 this year and you contribute $6,000 into your Roth IRA, this time, you don't get a tax break on the $6,000 today. So you have to pay taxes on all $50,000 today, and the $6,000 that you contribute into your Roth IRA is after tax dollars. So you're gonna pay taxes on all $50,000 and you might be left with $40,000, and out of that $40,000, you have to pay the $6,000 into your IRA or however much you want to contribute. Now, the difference here is, let's say that you deposit the same $6,000 as you did here with after-tax dollars. Now, if this $6,000 grows to $60,000, you don't have to pay any taxes when you pull this money out, assuming you meet all the qualifications, because you paid taxes when the money went in. You didn't get the tax break initially, you get the tax break at the end. What you need to understand is that right now in 2020, tax rates are at historical lows, and nobody knows what taxes are going to look like in 5 years or 20 years or 30 years. So it might not be a bad idea for you to use a Roth IRA and take advantage of these historically low tax rates today, instead of getting a big question mark tax bill when you're pulling this money out, because you have no idea what tax rates are going to look like. The tricky part here is that not everybody is allowed to invest into a Roth IRA. If you and your spouse are making $206,000 a year or more, you are not allowed to invest into a Roth IRA. But that doesn't mean that you cannot use a Roth IRA through the tax loophole called the Backdoor IRA. Hello, IRA home? The Backdoor IRA isn't a separate IRA on its own, it's just a creative tax strategy. Now, I do need to tell you that although I am a licensed attorney, I am not your attorney, so if you have specific tax questions, talk to a tax professional in your area. If you're making multiple 6 figures a year, you're not going to be allowed to invest directly into the Roth IRA, so what you can do is you can take your money, pay taxes on it, and invest it into a traditional IRA. So look, in the traditional IRA, you are not paying taxes on this money, but what you're gonna do is you are gonna pay taxes on this money, and then you're gonna take your after-tax dollars and invest it into your traditional IRA. As soon as you do that, you are going to roll over this traditional IRA into a Roth IRA. You can't deposit directly into here, but you can deposit your after-tax dollars into here, which is the same strategy as this, and then you can roll this over into this. The second thing you need to do is make sure that your investments align with your goals. I don't use an IRA because an IRA doesn't align with my financial goals. I have no interest in investing my money into something to build this big investment account that I can access when I'm 60. I'm not working for retirement. I'm working for cash flow. I work hard to invest as much money as possible, but my investment goal isn't to create a big investment account. It's to create as much monthly cash flow or passive income as I can. Instead of investing $6,000 into something I can't use for decades, I'm trying to increase my monthly passive income by $500 a month or $1,000 a month year after year after year. And if you're saying, but what about the tax breaks? Look, real estate gives me the same tax breaks. Real estate allows investors to grow their money completely tax-free if you do it correctly, and it can pay you with passive income that you can use today. Your goals are not mine. What I'm trying to tell you is that you need to know exactly what your goals are and make sure that your goals align with your investments, so know what you're working for. Third, you need to know how to get the best returns out of your IRA. My dad is one of the hardest working people I know, and he had been investing into his IRA for years, and one day he sat me down and asked me to look at his IRA with him. So now I'm looking at his statements, and he has a traditional IRA with JP Morgan Chase Bank, and his IRA is earning him 0.03% a year. His money was going into his IRA tax-free, which gives you a tax break today, which is cool, but you're missing out on the opportunity to capitalize on these historically low tax rates today and potentially have to pay a lot higher tax rates in the future, depending on what happens. Plus, you're essentially just creating the savings account that you can't use, which is giving you very low returns, which is just getting eaten away by inflation. I don't use an IRA, but if I did, I would use a Roth IRA. This way I don't have a big question mark tax bill when I retire, and I can take advantage of these historically low tax rates. And then I would move my money into a self-directed IRA, which means I am now allowed to invest my money however I want. So I can invest my money into stocks or index funds or real estate. Yes, you can use your IRA to invest in real estate if you have a self-directed IRA. If your IRA, or any investment for that matter, is paying you less than 1% a year, at that point, you'd be better off just moving your money to a high-interest savings account because now you're getting a guaranteed return. But if you move your money over to a self-directed IRA, now you can invest this money how you want, you can have control over your money, and you can take these profits that you're getting and reinvest them tax-free. The key to making the smartest decisions with your money is you need to stay on top of what's happening in the finance and business world, and that's why we created the free Minority Mindset newsletter, where our team first breaks down the top finance and business news, and then we show you how this news affects your wallet. This way you can be smart with your money. This newsletter is completely free, and you can subscribe to our newsletter by clicking the link up here or by clicking the link in the description below. Thank you for watching. If you enjoyed this video, share it with one friend. That way we can help spread the word. And if you want to learn more about how you can invest your money in real estate the right way, I already made a video talking about this, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching. I'll see you next time, and as always, keep hustling.